Hey guys, welcome to IFRS 16 practice. So in this class, we'll discuss about the practical aspects of IFRS 16 leases. So in the first section, we will discuss on the definitions, scope, and applicability of IFRS 16 leases. IFRS 16 leases was issued by IASB in January 2016. So it will replace IAS 17 leases for reporting periods beginning or after 1st of January 2019. Lessee. Lessee means a person who holds the lease of a property that is a tenant. Lessor. Lessor means a person who leases or lets a property to another, which is landlord. So technically, a property is leased by lessor to lessee. Okay. So IFRS 16 sets out a comprehensive model for identification of lease arrangements and the treatment in the financial statements for both lessors and lessee. Objective: IFRS 16 establishes principles for recognition, measurement, presentation, and disclosure of leases, with an objective of ensuring that lessee and lessor provides relevant information that faithfully represents those transactions. Scope: IFRS 16 leases is applies to all the leases, including subleases, except for leases to explore the use of mineral oil, natural gas, and other regenerative resources. Leases of biological assets held by lessee, so that's dealt in IS 41 agriculture. Service concern agreements, which is dealt in IFRIC 12 service concern agreements. Licenses of intellectual properties granted by lessor, so which is dealt in IFRS 15. And the fourth category is rights held by lessee under licensing arrangements such as films, videos, plays, manuscripts. So those are dealt in IAS 31 intangible assets. IASB considered but decided against scope exclusion for long-term lease of lands. So therefore, such leases, so if there is a lease of land, it has to be accounted for under IFRS 16. Subleases are required to be accounted in the same way as other leases according to the scope of IFRS 16. So there are few recognition exemptions when it comes to IFRS 16. So instead of applying the recognition requirements of IFRS 16 described below, LSE may elect to account for the lease payments as an expense on straight line basis over the lease term or other systematic by, for the following two types of leases. So in the case of these two types of leases, so instead of applying for principles under IFRS 16, LSE may elect to expense off the lease payments. So the first one is leases with a lease term of 12 months or less and containing no purchase options. So this election is made by class of an underlying asset. So if the lease term is 12 months or less than that, so then the lessee can recognize an expense instead of accounting for under IFRS 16. Second is leases where the underlying asset has a low value when new, such as personal computers or small items of office furniture. So this selection has to be made lease by lease basis. So if the asset is of low value and it is of category of personal computers or small items of furniture, then the lessee may go forward and account it as an expense instead of applying the principles under IFRS 16. Let's look into a few of the case studies of this low value lease assessment and other exemptions to apply.